Welcome back, folks. I am Jon Najarian, and this is 3 at 3, just like the hat says. 3 at 3 every business day. We bring you unusual option activity. It is the 30th of April, 2021, the last trading day of the month, and we're about to give you the last 3 at 3 of the month. Funny how that kind of goes hand in hand, right? Let's start it off with our disclaimer, which says that this is for educational and informational purposes only, that nothing I'm about to tell you should be taken as investment advice. All investments involve risk, by the way. Intellectual property rights. This statement says that we have intellectual property in copyright, trademark, patents, registered marks, our intellectual property is not limited to that. So please ask us before you reproduce this in any fashion. Here was a Twitter trade. You may have heard that Scott wanted me to dial into the halftime report, which I did today. First time in 14 months that Pete and I have been on at the same time, I believe. Nonetheless, I was on the phone because Twitter. I had overstayed my welcome. Is one way of saying it. I had rolled up several times from the 55s to the 57s to the 60s to the 65s. So I had taken profits on many of those on the way up, but the last one, pretty much just a bust. Nothing good happened with that trade. So lost probably mid 20,000s on that one. Not fun, but we saw this one just days before. In other words, if you go back 8 days, last Thursday, we saw big put activity. Now, I had been rolling up and up and up with the calls and doing quite well, but then we noticed this with the stock at almost $66. Hey, they're buying 10,000 of these May 62.50 puts. They paid about $2.35. At least that's what I paid. It only had an open interest of less than 100 contracts, which means these were brand new opening trades of 1 million share equivalent, because every option is for 100 shares of stock. So this particular trader was quite bearish, buying just out of the money put and financing that somewhat by selling an out of the money call in June. So Twitter, of course, came out with their earnings, and I'll talk about that in the question and answer part of this presentation today. But nonetheless, they were pretty bad. Yeah, they met, slightly beat on each the profit and earnings, but then the guidance was not good. And so those June 85 calls didn't go to worthless because they're all the way out in June, but they dropped in value. Meanwhile, the May 62.50 puts, yes, they increased in value. Why? Well, because look, with Twitter at 56.41 when I called in, the drop was about 13.3%. It's over 14% now. And those puts that were $2.35 are now $6.63, have been as high as $6.89. So I have taken off all of these puts. This is one of those happy situations on the put side. On the call side, lost all of it. On the put side, this very aggressive put buy, which was the May 7th puts, so I still have time. I took all this off as a profit. As you see, they opened at 6:30, so I couldn't have got worse than that, and I didn't get worse than that for my sale. So from 235 up to 630, yeah, that dog will hunt. That helped offset the loss on those calls. In fact, it put me into the black slightly. And then I rolled down to the, I think, 56.50 puts, paid about $1.45 for those, betting that maybe we don't just see a one-day event here. And I'll be happy to take profits on those quickly if the stock keeps dropping like it has today. Like I say, a 14% drop for Twitter. Let's get started with some unusual option activity that's fresh. There's my fresh brother, Pete, with Scott Wapner. Pete was hitting Boston Scientific, BSX, May 43 strike calls. So that's an in the money call, folks. Stock's 43.53, and they're buying the 43 strike calls. That means these calls are intrinsically worth 53 cents. The right to buy it at 43 when it's 43.53 is differential 53 cents. So a just in the money call, bought those, sold the upside call against it. These calls expire next Friday, May 7th. All right, let's talk about our YouTube channel. Glenn and I were just talking, saying, God, it just seems like a couple weeks ago we were 12,000, 13,000, 14,000. Now we top 17,500 subscribers. I thank each and every one of you who are watching this and are a subscriber. And if you're not, you can subscribe for free by going over to YouTube, typing in Market Rebellion. Then you look and say, you know what? I can subscribe right there, which you can. And I'd encourage you to do it. Market Rebellion on the YouTube channel. There are literally thousands of videos. Why? Because we probably do 3 or 4 a day. And we have been doing them for quite a while. Pete's The Take, my 3 at 3, my 60-second workout video. We also have AJ Monty in there, our daily crypto bite. All of it is free. So depending on your situation, your schedule, you can go back and look at them anytime. Best thing to do, subscribe. Why? It helps us, doesn't cost you a penny, helps us, and it's good for you because that way, especially if you click the bell next to subscribe, you would be alerted every time there's fresh content, which happens at 10 a.m., 10:30 a.m., probably 8:30 in the morning, just before the market opens, and the 3 at 3, 3 p.m. Eastern time. Now let's get to the second of today's 3 at 3, which is Las Vegas Sands, LVS. June 63 calls, look at that, pushing towards 30,000 in the volume column. That is huge. That is, if it hits 30,000, folks, that's 3 million share equivalent because every option is for 100 shares. So Pete was citing this, and these are calls that expire in June, but not regular June. The 4th of June expiration, the first Friday in June, these calls will expire. There it is. Oops, that's BSX. Sorry about that. But nonetheless, Las Vegas Sands, LVS. Let me give you a price on it right now. I'm going to take a quick look and see where we are. LVS. It is at 61.09 right now. LVS. Down just 10 cents on the day. It opened at 61. It traded as high as 61.31, and it's in a real tight range today. And 60.13 to the downside, but came off of that nicely, probably because of Pete. Our daily crypto bite is a discussion, about a 15-minute discussion or so every day at 10 a.m. Eastern time, where CJ and Monty and I sit down and talk about biggest crypto moves. Well, this week, a whole bunch of them. One of them was just recent when the president of JP Morgan, that's of course not the CEO, not Jamie Dimon, but nonetheless, Mr. Pinto came out and said, yeah, we're getting into crypto. We're going to be offering it to our clients. Huge news. So that means 3 of the biggest brokerages and banks, JP Morgan Chase, Goldman Sachs, Morgan Stanley, are all embracing crypto for their high net worth clients. That's great. And that means a lot of institutional trading because they'll enter through institutions that are trading it like Pantera and perhaps even like us, because we are launching our crypto hedge fund as well. But you can hear all about what we're talking about as far as altcoins, Bitcoin, support, resistance, all of that for free every business day at 10 a.m. Eastern time, the daily crypto bite. You can go to marketrebellion.com, type in marketrebellion.com/try crypto, and you could join for $1 a month. The video is free, but if you want to be in the chat room 24/7, got to join. That's $1 for your first month. Now let's talk about the third of today's 3 at 3, which is EWJ. This is the Japanese ETF. They are buying with the stock at 67.51. They are buying the 71 calls, July 71 calls. So these are May, June, July, 3 months into the future. Bought almost 10,000, almost a million share equivalent, 930,000 share equivalent as of that print. 9,300 is 930,000 share equivalent, and $4 out of the money. With the stock at 67, that's roughly $4 out of the money. There is the stock over the past, that must be about 6 months or so. EWJ is the trade, and you see the range there, 67.34 to 67.80, pretty tight range, but it's an ETF. So that's to be expected. I bought at the money, sold out of the money. All the more reason with an ETF to do that. And if you'd like to learn how we do what we do here at the 3 at 3 or any part of Market Rebellion Elite, you can go to marketrebellion.com/UOA. That is marketrebellion.com/unusual option activity or UOA. Thank you. Questions? Yeah. And we need to up your question game, folks, because frequently we get the same question over and over again. We'll answer them frequently, but not every day. So please, if you have a question that you'd like us to cover and you'd like me to shout your name out on Twitter and on this broadcast, please hit @Jon Najarian. Josh Mitchell did that, and his handle is Mr. Josh Mitchell. John, with your premiums from the covered calls you write, do you cash out or redeploy the funds? Treat it like a drip campaign or trying to figure out the best way to use funds once they expire worthless. I end up letting it just go into my cash account. I do not deploy it back into that same asset by buying more of that asset. In the cases where this has been working, I am more than happy to own that apartment, rent it out on a weekly or monthly basis, and just use that money to deploy into other trades. So I don't just reinvest it like a dividend reinvestment plan or a drip. But I think it's a great question, Josh, and I don't fault you if that's what you choose to do with it. Most of my trades, by the way, are in a tax-free or tax-deferred. I have one of each. One is tax-free, which is a Roth. As you know, as long as you've paid the tax, you get to declare that IRA a Roth IRA. And then that grows tax-free all the way through the investment. The other is tax-deferred, meaning when you finally draw it out, you'll pay whatever the applicable tax rate is there. So I trade in tax-deferred almost exclusively, Josh, and so I don't mind just buying into something else and redeploying the funds that way. Why? Asks George Ort. His handle is @JORTU89. Why do share prices drop after great earnings for a few companies that we saw this week? I've got a good example. Would be, again, be Twitter. And there it is. Twitter. Some of the factoids that I looked at this morning and I focused on for Twitter when I spoke with Scott Waffner about that were, number one, price targets were cut by 5 of the top 7 analysts today. That's going to leave a mark. And it did. Twitter got hit. Institutions that follow those analysts lightened up. The average lightening up was about 11 or 12%, I think, in their price targets. It's rare that we see people drop their targets that quickly, but they did because they didn't like the growth going forward. They had a slight beat on profit. The revenue was in line, and the guidance was also just in line. That's not how you hold on to a big gain. And Twitter, which had been significantly higher than where it closed last night at 65 and change, was under pressure. I think it's a good accumulation between here where it is 55 and about 53. So if we get towards 53 today, I will exit those puts that I told you about that I put on in addition to the 6250s, which were cha-ching, the others that I hope to cha-ching on are moving. In fact, I'm going to take a look at them while we're talking. TWTR, Twitter, and I'm going to pull up the, those are May 7th puts. And I have those at the, stock is at 56, so it's down 14%. And these 56.50 puts are up almost 30 cents from where I bought them. I bought them at $1.45. They're $1.76 bid, offered at $1.78. So call it 31 cents to the upside from where I bought them. If we see that flush one more time, maybe I'll even take off the rest of it. Why? Because I really like pulling money off the table into a weekend where we have time decay. They've been as high as 244 today. If we go over 2, I will probably say adios to these puts. But that's what I'm doing. You guys have to decide if that's appropriate for you. Last question. Let's get to it. At Jax7, which is at JAX7 Room. All right, Jax. Ryan freaking Meltzer was the big dog in town. Yeah, Ryan freaking Meltzer is the big dog in town. In fact, Ryan freaking Meltzer is the CTO of a company that I advise. I am not on their board. I do advise them. I'm going to be going down and meeting with the team down in Florida. I'll meet with them Monday, Tuesday, and the CEO, Doug Cole, fabulous dude, will be addressing the Wall Street conference that I will be helping host with my friend, Jason Lyons of Lyons Capital. Ryan Meltzer is a early hire over at Tesla. He is the battery guy, a genius, I believe. And I had, thank you very much, Jax, a great conversation with him about how they remanufacture and demanufacture lithium ion batteries. They take that battery apart once it's used up, take it down to a black mass, and then can repurpose that. It can, in other words, be used again. And that is the magic, folks. So they do it in the greenest way possible. They recycle the water. You can hear all about it. I did a podcast with him that just dropped. So check it out on my Compound Interest podcast. I'll be doing a podcast from that Wall Street conference down in Palm Beach on Tuesday. It'll probably go up Tuesday or Wednesday. And as I say, Doug Cole is going to be the guy I talk to. He is the CEO of American Battery Tech. ABML is the symbol right now, but that'll be changing. And I can't wait for that stock to uplist because bang, that's going to drive that one significantly higher. Green, lithium, yeah, those are keywords, and that's something that's going to be in focus under this administration for sure. Thank you for joining me, folks. That will be on my Compound Interest podcast. There it is with Ryan Meltzer. I'll also be, as I said, talking with Doug, the CEO, Doug Cole, down at that Wall Street conference. Encourage you guys to join us. Thank you. This is going to do it for the week and the month. I appreciate you joining us. Please share both 3 at 3 as well as our YouTube channel with your friends. You can join the rebellion. We welcome you. Trade like a rebel. And I'll see you back here Monday on 3 at 3. Thank you, folks. Have a great day.